This is Fintech Insider News. This week, Chime climbs 37% in debut after its $864 million IPO. Walmart and Amazon eye up stablecoins as US regulation advances. And Up introduces Australia's first in-app group money feature in banking. We'll be discussing all of this and more on today's news show.
As a contractor, I don't pay for materials I don't use. So why would I pay for stuff I don't need in my mobile plan? That's why the new MyBiz plan from Verizon Business is so perfect. Now I can choose exactly what I want, and I only pay for what I need.
Right now, with MyBiz plan, get our best price, as low as $25 a line. Visit verizon.com/business to get started today. New lines only. Price per month with 5+ lines. Includes auto pay and paper-free billing and promotional discount. Taxes, fees, economic adjustment charge. Applicable add-ons, prices, and terms apply. Guarantee applies to base monthly rate and stated discounts only. Add-on prices additional. Offers end June 30th, 2025.
I think you're on mute.
Workday's starting to sound the same.
I think you're on mute.
Find something that sounds better for your career on LinkedIn. With LinkedIn Job Collections, you can browse curated collections by relevant industries and benefits, like flex PTO or hybrid workplaces, so you can find the right job for you. Get started at linkedin.com/jobs. Finding where you fit. LinkedIn knows how.
Hello and welcome to episode 973 of Fintech Insider. I'm Benjamin Ensor, Director of Research and Strategy at 11FS. As the temperatures soar across Europe this week, there's also a bit of a heat wave lighting up the fintech market, with plenty of stories on our radar suggesting we might be on track for a long, hot Northern Hemisphere summer in fintech. We'll be taking more of a look at some of these stories shortly, but in the meantime, some of the people who are hot on the heels of the headlines this week are our three panelists. So let's meet them. First up, representing the Northern Hemisphere, we have a Fintech Insider return for Alex Johnson, founder of Fintech Takes. Welcome back to the show, Alex. It's always a pleasure to have you on. Can you tell our listeners who haven't come across you before a little bit more about who you are and what you've been up to?
Sure. Yeah. Thanks for having me back on. Always a pleasure. I write a newsletter and create a podcast called Fintech Takes, as you mentioned, that analyzes the intersection of finance, technology, and public policy. And so mostly I just spend my days obsessing over the same topics we're going to be talking about today. So thrilled to be here.
Welcome. And we also have a Fintech Insider return for Miguel Armaza, General Partner at Gilgamesh Ventures. It's great to have you back on the show, Miguel. Could you likewise just remind our listeners who haven't come across you before, or those who have, a little bit about you and Gilgamesh?
It's my pleasure to be back, Benjamin. Thank you. I run, along with my co-founder, Gilgamesh Ventures. We are an early stage, mostly pre-seed seed fintech fund investing out of New York City, in New York, in Latin America, and elsewhere around the world. And since I last came here, we actually announced our second fund. So we're now managing north of 35 million AUM. And, we've backed 4 companies to date this year. And we're looking for more. And I also host the Fintech Leaders podcast, where I bring mostly CEOs of the coolest fintech companies that I can think of.
Fantastic. Welcome back. And then, representing the Southern Hemisphere, we have a Fintech Insider debut for Evan Simmons, Principal Product Designer at Up, who is very kindly up in the middle of his night. Thank you so much for joining us such an ungodly hour. Could you tell us a little bit more about your role at Up Banking, please?
Yeah, sure. Thanks very much for having me. Very excited to be here for the first time. Yeah, I'm one of 2 principal designers at Up. For those who maybe aren't familiar with Up, we're a digital bank in Australia. We've been around for about 6 years now, and we've just over 1 million customers. So been growing very rapidly. We're built by creatives and engineers, so we're very much tech first. We're still mobile only, so there's no sort of web presence with us. And I guess what we're really about is we're designed to make money really easy for our customers. So it's all about a great customer experience. So my role at Up every day is sort of split between 2 things, really. It's working with small cross-functional teams to build new features, but also like looking a bit ahead and starting to think about like what are the next opportunities that we can really explore.
Fantastic. Well, welcome. So now we have a panel. Let's move on to the news. So our first story, which has been very widely reported, is that Chime has climbed 37% in its debut after an $864 million IPO. So Chime Financial made a strong debut on the Nasdaq, with its stock opening at $43 per share, significantly above the $27 IPO price. The stock closed on the first day at $37, marking a 37% increase on the first day of trading, and it stayed there or thereabouts in the days subsequently. The successful IPO raised $864 million, bringing Chime's valuation to approximately $11.5 billion. That's a bit of a drop from its 2021 peak valuation of $25 billion during peak fintech, but it still positions Chime as among the most valuable consumer fintech companies to go public in recent years. Chime operates as a digital bank, offering fee-free banking services, including checking and savings accounts, debit cards, and credit-building tools. It earns revenue primarily through interchange fees when customers use Chime-branded cards. So, Alex, I'm going to come to you first, as I know you're very familiar with the market and Chime in particular. Perhaps, first of all, how big a deal is this for the US market? We've had some tough times for fintech. Is this a sign of resurging confidence in consumer fintech?
Yeah, you referenced 2021. I mean, that was the peak. I don't think we'll ever see anything like that again in our lives, probably. But we definitely are surging back in the U.S. There's been a dearth of new publicly traded fintech companies, right? For a while, everyone's been very nervous about going public. A lot of late-stage fintech companies in the U.S. and around the world have delayed their entrance onto the public market, and now the seal's been broken, and the first couple IPOs that we've seen in 2025, including Chime's, have gone extraordinarily well. I don't know how much of that is due to the enthusiasm around Chime specifically, and how much is due to just sort of a general enthusiasm for investing in new companies. But to your question, I do think we have circled all the way back around to consumer fintech is cool again. It wasn't there for a while. It was more focused on B2B, on infrastructure. There was a sense, I think, that consumer fintech was a little played out or sort of too crowded. And I think that notion, like a lot of ideas that sort of circulate through the ecosystem, has actually circled all the way back around, and consumer fintech is cool again. There's a recognition that banks still don't do enough to help consumers, and there is a gap in the market that companies like Chime can fill.
Thank you. Miguel, what did you think of this as an investor? I mean, it's obviously always good news when there's an IPO, and the original investors, the early stage investors, get some of their money back, hopefully get a return on their investment. You almost certainly do when there's an IPO. Is this good news? Do you think we're going to see more IPOs coming to the US market this year?
There's no doubt it's great news. Let's start with that. We've had a few already, right? I believe eToro, Webull, those are a couple. Obviously now Chime, and there's more coming. There's some that we know publicly that have kind of indicated that they're going public. There's about, I heard this from a very senior investment banker, there's about 100 to 200 tech companies that have filed confidentially to IPO. 25 to 50% of those are fintech or finance adjacent. Not all of them will move forward, but there's a big bench. So that's great news. We do need healthy companies to go public, right? And so that's only the best ones will probably go public this year. So it might not be an avalanche. We'll see. Chime is a great company, but it's not like they're growing 100% year over year, right? I believe their growth is 20% year over year, which, is good. It's not amazing. And so I think what people are going to be watching when it comes to Chime over the next couple of quarters is how much additional share of wallet can they capture from their existing customers. They're going to be reaching 10 million customers pretty soon, right? And so can they capture more credit from those? And as you guys at 11FS have been saying for years, credit makes the world go round. So I think that's the main focus for Chime.
Evan, $864 million is a lot of money, whether that's Australian dollars or American dollars. What kinds of things do you think a digital bank might do with that money? I mean, you're not going to reveal all of Up's secret plans to take over the world, but if you were at Chime, what kinds of things do you think they might be thinking of using some of that cash to do?
Yeah, it's a good question. We a few years ago were acquired by Bendigo Bank, which was quite a big moment for us and allowed us to do a lot more. So I'm sure there's many opportunities there. It's hard for me to understand, to know probably exactly what they might do. We certainly used as an opportunity to go headfirst into home loans, and we've had a lot of success with that. So we've got about over $1 billion in mortgages now. So that was something that we were really able to do through that partnership and having more cash, I guess, available to us. I think with Chime, just looking at, I guess, their business model, it seems that a lot of it is related to their income features. So maybe through more of an up lens, I think there's many opportunities there to probably help customers to, I guess, build those better saving habits through being there right at the point of money coming in. So we do a lot of things in that area, a lot of automation around things like payday. So that certainly is an area that we're interested in, and I'd imagine they'd be looking for more opportunity there.
Alex, I'd love you to sort of maybe build on a little bit on what Miguel and Evan have been saying. 20%, as Miguel says, is a decent growth rate that many companies would be very, very happy with. But for consumer fintech, like someone like a Nubank or a Revolut or even maybe an Up, wouldn't be that happy with only 20% growth. What kinds of things do you think Chime might do to drive faster growth?
Well, so I think part of the challenge that Chime has is that it grew too much earlier in its life, right? So one of the sort of tricky things I think about consumer finance is, this ties directly back to Miguel's point about lending. Growth is fine for impressing investors in the private markets, but you want to have profitable growth, right? And I think, when you look at Chime, they talk a lot about the 8.6 million members that they have. Those are active members, right? Those are members who are engaged with the service, who are using it actively. We know that Chime has a much bigger number of customers who have come in at one point, downloaded the app, signed up, and a lot of that was due to growth that wasn't always necessarily bringing in the members that Chime wanted to have, right? Chime reportedly has had major problems with first-party fraud. There have been car rental places and hotels where you can't use your Chime debit card to reserve a hotel room or a rental car. That's because of the massive amount of first-party fraud that's happened on Chime over time. So I think in some ways what we're seeing is Chime sort of detoxing off of growth over everything else, growth at all costs, as they exit the private markets and taking a much more deliberate strategy around, as Miguel was saying, how do we cross-sell? How do we deepen our relationships with our members? They talk a lot in their S1 that they filed with the SEC about establishing primary financial relationships, right? That's the flywheel that they're trying to build. They want to be the primary financial services provider to their members, most of whom have less than $100,000 in annual income. Now, they've talked a little bit about moving slightly upmarket and maybe targeting folks between $100,000 and $200,000 in annual income, but they're still trying to serve everyday Americans is how they talk about it. And I think, Miguel is right. We're going to see them get further into lending. They've launched some short-term lending products. They've launched earned wage access. They've built a credit builder card, which personally drives me crazy, but we don't have to do a rant about that. And, I think that the thing that is really, really interesting about Chime is they have a very specific philosophy about who they are as a company, right? They used to do the thing that every private consumer fintech company does where they say we're a tech company, not a bank. And that's laughable, and public market investors don't buy that. You don't get tech multiples if you work in finance. However, now what they're saying is we're not a bank, we're a payments company, right? And so they want to be seen as a asset-light, balance sheet efficient, transaction-heavy company. That's their business model. Obviously, interchange is a core piece of that. But even when they talk about lending, they don't talk about lending in the context of we're going to have a big balance sheet that we're going to make loans off of and we're going to originate all these loans. They talk about it as liquidity solutions for their members. So lending to them is just another form of payments, essentially a transactional business that holds very little balance sheet risk. And that's the way they want to grow. I don't think we've seen a consumer finance company in modern history that has achieved the scale Chime has with no ambitions, seemingly, of becoming a bank, getting a bank charter, or embracing the traditional bank business model, which is net interest margins. So they're going to grow and they're going to try to become a deeper, more important part of their members' lives. But they're not going to try to become a bank. They're not going to grow the way that most banks or even consumer fintech companies does. And that's what I'm watching.
You're right. It's a very interesting strategy because, of course, Chime is not a bank, is it? It's not regulated as a bank. It doesn't have a banking license. But you're right. Many other firms that have started that way have then sought to get a charter or a license. And for Chime not to do so is a very different strategy. Thank you. Okay, well, let's move on to our next story, which also comes from the States, which is that Walmart and Amazon are eyeing up stablecoins as the US regulations advance. So both Walmart and Amazon are considering launching their own US dollar-pegged stablecoins, or potentially joining a consortium of retailers using digital tokens for customer payments. The goal, seemingly, is to cut out the credit card networks like Visa and MasterCard, enabling faster, cheaper transactions and saving billions in fees for the retailers. This comes as the US Senate advances the so-called Genius Act, a proposed law that would regulate stablecoins, requiring full fiat backing, regular audits, and regulatory oversight. The potential use of stablecoins by major retailers caused Visa and MasterCard shares to dip by 5 to 6%. So Amazon and Walmart are obviously huge giants in retail. Alex, how does bringing stablecoins in help them, and how does it help their customers?
Yeah, good question. So a couple things as points of clarification. One is this is not a new obsession on the part of Amazon and particularly Walmart, right? My advice to young people in the world is to find someone who loves you the way that Walmart hates Visa and MasterCard, and you'll have a happy life. So in general, they've been trying to get away from interchange fees for a long time. It's almost like a personal vendetta on the part of Walmart executives at this point. And so stablecoins are just the newest potential mechanism to enable them to do that. One thing that's important to note about the Genius Act, and this is where I found the Wall Street Journal article that you referenced slightly misleading, at least in terms of its headline. The Genius Act, which just passed through the Senate, as written, does not allow publicly traded companies that are predominantly not financial services companies, so large retailers like an Amazon or Walmart, from issuing their own stablecoin unless they get a waiver from a board made up of senior regulatory officials in the U.S. And given that every time Walmart or other retailers have tried to get some form of a bank charter in the past, the entire banking lobby in the U.S. has freaked out and basically stopped them from getting it, it seems unlikely to me, possible, but unlikely, that Walmart or Amazon will issue their own stablecoin directly. Now, of course, that's totally fine because there'll be lots of other regulated stablecoin issuers that they could partner with. They could do it through a consortium, as you mentioned, or they could partner with an existing stablecoin issuer like a Circle, who also just went public. In fact, Coinbase has a distribution partnership with Circle where Coinbase actually makes more money than Circle on USDC. So there are arrangements that you can have that sort of sidestep that requirement and still allow you to take advantage of stablecoins. In terms of the value that it would provide, the trick with this whole thing is retailers don't want to pay interchange fees, but consumers want to use cards, right? They're used to using cards. In the case of credit cards, they get rewards. They like rewards. Credit cards work extremely well for consumers, even though they annoy large retailers like Walmart. So the trick is, how do you design a ecosystem, a closed loop ecosystem that is rewarding for Walmart customers or Amazon customers to use and to store money in rather than using their preferred forms of payments, which tend to be debit cards or credit cards? We've seen examples of retailers and merchants who figured this out. Starbucks is the one that everyone always talks about. Starbucks is not a bank, but they do some bank-like things, including having a massive prepaid program where customers can load money in and take money back out. That's enormously beneficial for Starbucks, but they designed an experience around that prepaid mechanism that made it very valuable for Starbucks customers. And what I haven't seen from a Walmart or an Amazon, but we may see at some point, is the construction of a similar closed loop loyalty and commerce ecosystem that could be powered by stablecoins. And I can talk about why stablecoins might be a better solution for that than prepaid if you want to get into that level of depth. But I think that's when they talk about using stablecoins, that's one of the main use cases, is constructing that closed loop ecosystem.
I think one of the really interesting angles here is this an American specific thing? Because you quite rightly say, American retailers have been furious about interchange for decades. And yet in other markets, like Australia, Evan, like Europe, etc., we've seen regulators cap interchange and bring interchange down, which doesn't eliminate the tension between merchants and banks and card networks, but it reduces it. Evan and Miguel, do you think we might see retailers in other markets looking at stablecoins to address this problem? Or do we think maybe it's a particularly American problem because interchange rates are so much higher? And I realize I just threw a question to both of you, which is a bit unfair. So maybe Miguel, get your perspective first.
Yeah. I mean, on one end, it is a very American thing. But on the other end, if you talk to Visa and MasterCard, where is it that they're making most of their money when it comes to spreads? It's not in the US. It's in emerging markets, right? So it's also a problem for merchants in Brazil. It's also a problem for merchants in Poland, in India. So I think this is a global thing. Of course, it's nuanced country by country. Alex is completely right. I mean, before stablecoins, it was account to account, bank to bank payments. That was a way to get around it. We have talked to many companies that are launching this kind of pay by bank networks. We've invested in a couple. They're kind of adjacent to that. And what we've seen is that the most likely transaction flows to move over from Visa and MasterCard are not credit cards, but are debit card payments, which are still pretty massive, right? So maybe that's how you train the consumers to eventually come to your wallet and away from the big ones. But it's not easy. I mean, those guys have a big strangle on the market.
Evan, are you hearing of any interest from sort of retailers in Australia in stable coins or other ways of sort of getting around the banking system or the credit card networks?
Yeah, not so much in, I guess, retailers. I think customers, or I guess Australians in general, are quite sensitive to these sort of fees. There was a lot of talk sort of pre our last election around the fees that get charged at the point of purchase. And they're relatively small, but I think customers are starting to notice it a lot more, especially pre-COVID, when pretty much everyone's using cards to make payments these days. I mean, Australia's quite advanced in that front, so there's a lot less cash in the market these days, so a lot more people are seeing those fees. So there's a sensitivity around that, and I think that then creates an opportunity. Retailers in Australia, though, I mean, there's a lot of duopolies here, so there's probably potential for, say, your grocery chains and things like that to sort of step into this market. But I think it'd be very difficult in Australia, just with how regulated we are. That, I mean, maybe partnerships with banks would work on that front, but to try and do that sort of thing on their own, I don't think they'd have the appetite for it.
Interesting. Alex, coming back to you, let's just imagine that Walmart and Amazon can out-lobby the banking lobby and manage to get some kind of approval and move ahead with this in a year or two or so. How do they get customers to start using it? Because as you say, customers, they like their credit card rewards. Right? And it's like, how do I even pay with stablecoins in a store? I mean, I can't do that today. How do they start to overcome some of that challenge and actually get the customers to say, hey, yeah, sure, I'll use stablecoins?
Sure, yeah. So The first thing you do is you don't tell them it's a stablecoin, right? You don't expose any of that complexity or nuance to the end consumer at all. You just say, hey, these are Walmart bucks, which is just a fancy way of us doing internal accounting. You give us money, we convert it into this other thing. It sits in your Walmart wallet, and you can use it to make purchases. So first thing you do is you don't expose any of that complexity to the end customer. Second thing you do is you bribe the customer. So you give them rewards, you give them incentives, you give them special deals. The nice thing about putting all of this in a mobile app or a digital wallet is that you can push messages to the customer programmatically when they're walking around different parts of the store, when they're shopping on Walmart.com. So you basically create a loyalty and incentive infrastructure to get the customer to start using it and getting into the habit of essentially just buying Walmart bucks. Now, the nice thing about a Walmart or an Amazon or one of these large retailers, you could even think about like Disney with Disneyland, right? When you go, it's an immersive experience, right? You go in and everything that you need is right there. It's its own little world already. It's all encompassing. And so the idea of that all encompassing world having its own local currency is actually not that strange and not that much of a stretch. The other thing that anyone who controls stores or commerce experiences or entertainment experiences like Disney is they can mold the experience to make it more rewarding in non-financial ways to the end user, right? The best example of this is airlines, which are really just large credit card companies that also happen to fly planes around. The virtue of flying the planes around is they can make all of our experiences suck unless you have the credit card, in which case they can make your experience magical. Anyone who controls a larger ecosystem that people interact with on a frequent basis have these emotional and non-financial levers that they can use to incentivize or drive behaviors. And as we see with airlines and airline miles, that can be a very powerful incentive as well. So I think all of those are ways that you can start to do that. And then the last one that's sort of unique to stablecoins is stablecoins can be a mechanism of exchange that doesn't exist solely within the Walmart ecosystem, but exists within the larger Walmart adjacent ecosystem, right? So to give you an example, the problem with gift cards or prepaid cards is when you load money onto it, you end up with a little remainder that's left over, and the only place you can spend it is that one retailer, right? So there's a lot of breakage associated with it. The nice thing about stablecoins is they have the potential to be interoperable among a larger ecosystem of vendors and companies, right? And so you could imagine that, and I'll switch my example here, but in the US, there's a lot of Starbucks that are located inside of Targets, right? Another large retailer. You could imagine that a stablecoin that's issued by Target could be interoperable between Target and the Starbucks that are doing that because it's one mechanism of exchange. It's managed through this distributed ledger. All of it is accounted. There's more liquidity involved in a stablecoin. And so it opens up the ability for this currency to not only be useful within the very small, narrow ecosystem of the vendor, but within the larger ecosystem of their partners and adjacent companies that work with their customers. So stablecoins, that's how they're a little unique and different relative to something like a prepaid card, which we've had in the US for a long time.
If I can add a couple things to what Alex just said. So it is true that the stable coin kind of technology is going to make it easier to launch these programs. It is also true that Starbucks rewards has existed for a long time and airline rewards have existed for a long time. And so a lot of these brands are now thinking of maybe launching their own ecosystems, right? Powered by stablecoins. Why didn't they do it 10 years ago, 5 years ago? So I think we're going to see a proliferation of a lot of these, all right? Of big brands, medium brands, even smaller brands. And then we're going to see a Darwinian effect. And most of them will probably fail with or without stable coins. But some, of course, will succeed. So those are the ones we will be mostly talking about.
That's a great point too, because just to like add to that, like Walmart has been trying to do this for a long time, right? I don't know if folks remember the merchant exchange, MCX, and their currency digital wallet.
Yep.
Like Walmart has been trying this over and over and over again. And mostly what's happened is they've stepped on a rake and got hit in the face and then they've walked away from it because they didn't like the experience. Like it's hard to do this, right? That's what makes Starbucks and their mobile digital wallet prepaid ecosystem that they built so unique is the organizational competence it took to launch it, to support it, to get customers to adopt it. That's not a common thing. And even someone like a Walmart or an Amazon that has tons of resources, they fail at this more than they succeed.
This story is going to run and run, and we need a lot more time to discuss it than we've got on this podcast. Love the insights, gentlemen. Thank you. So let's take a quick pause, and we will be back very shortly.
Here at the Almond Joy Factory, where tropical vibes abound, we use soft, fresh-tasting coconut.
The crunchiest almonds and delicious chocolate candy.
Ah, but do you know what our most important ingredient is? Sometimes you feel like a nut.
Sometimes you don't.
Almond Joy's got nuts and something even way better than that. Yes, Almond Joy is made with almonds and joy.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alica Bank who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.
Welcome back. Before we get back to the news, we want to tell you about our latest Insights episode. Back in May, Fintech Insider headed to Zurich for the annual Point Zero Forum, where we had the chance to moderate a panel focused on AI innovation and what it takes for countries to stay competitive. We were joined by experts from NVIDIA, UBS, Microsoft, and Switzerland's State Secretariat for International Finance. It was a brilliant discussion and one we thought you might want the chance to listen to. It's out now. Just head to the podcast below this one. Okay, back to the news. And our next story is that Up has introduced Australia's first in-app group money feature in banking. So Australia's digital bank Up, which is backed by Bendigo Bank, has rolled out an in-app group money feature, letting customers split expenses, manage group funds, and chat, all inside the app. Customers can create groups with friends, housemates, or travel companions. Expenses can be sliced and assigned to individuals automatically, and the app tracks who owns what, sends reminders, and enables easy group settlements, all without leaving the Up app. So Evan, obviously it makes sense to come to you first. So firstly, congratulations to you and your colleagues for this. Can you tell us a little bit more about it and what makes it special?
Yeah, thank you. Groups is, I guess it's a really exciting sort of play for us because we know that there's a real world need for this sort of thing. Most of our customers are quite young, so that whole experience of sharing bills and expenses can be quite difficult, and young Aussies often struggle a lot with, I guess, that awkwardness around, asking someone to pay you back for something. Often there's like one person who's usually doing a lot of that mental maths, and they can often be left with that sort of debt as well. So we could see, and through customer feedback, that there was a real opportunity here to do something that would fit into their lives. We know we know young Aussies have many opportunities to make use of a feature like this. We have a lot of customers traveling overseas. We have a lot of customers who are in share house situations. So there's heaps of, points in our customers' lives where we think this would be really helpful for them. I guess what makes it special in terms of Up is that it's really well integrated into our existing services. So unlike having sort of that, I guess, third-party app that everyone has a different bank account, and sometimes you're sort of tallying up expenses, but there's no way to actually settle them within certain apps. This makes it really easy. So if everyone's in the app, they can add their expenses. There's a lot of great merchant identification, so they can see exactly where who paid for what when, and they're able to slice that up and then keep that tally and then settle it really simply, I guess. So that's part of it. I guess the other part is that with anything that we do with Up, we really want to make it a fun and enjoyable experience as well. So we don't just build this thinking of like, let's just add a bunch of expenses and then let customers settle it. We want to make sure that, we're using that sort of chat functionality. We're using things like emojis and GIFs and, sort of really encouraging that sort of banter as well. So it removes that awkwardness of these situations. So that's something that we really lent into with this as well.
I think regular listeners to Fintech Insider or people who follow 11FS more widely will know that we've had a bit of a crush on Up as a fintech and, love a lot of the stuff that you're doing. Do people have to be Up customers to use it? So you've got, 3, 4, young people sharing a flat together. Do they all have to be Up customers, or does just one of them have to be an Up customer for this to work?
They will have to all be Up customers to use it. We've made.
Why wouldn't they be, right?
and that's because it makes that really integrated experience really work well. We've made it easy as part of launching this feature to help new customers sign up and onboard really easily to the group's feature. So we think it's also a great way to easily bring your housemates onto Up. But I think that's part of the magic of it, is that you don't remove sort of the the transparency that happens around the kind of expenses that are being added.
Mm-hmm.
And when you're ready to settle up, it's instant. So we think they're real advantages and enough that once customers start using it, they'll see the benefits. So.
Fantastic, Miguel. What do you think of this? Do you think this is exciting?
Listen, if the numbers of Splitwise are any indication that people want this, I think that speaks for itself. I don't know the numbers, but it's millions and millions. The challenge of Splitwise, and I know the CEO Jonathan very well, so no disrespect, but like the challenge is monetizing, right? So if Up can do this as a feature of the overall component, maybe that's a better way to do it, or maybe that's a way to do it. But there's no doubt that people want and need this, especially for trips, especially for events, nights out. I think we've all been in those situations. So yeah, I like it, and I like it as a feature. But I'm also a loyal customer of Splitwise.
And not in Australia.
And I'm not in Australia. Yeah, who knows?
What's your take, Alex?
Yeah, no, I like it too. I think the thing I've realized over time in consumer finance is that most of the problems that look like money problems are actually relationship problems, and money is downstream of the relationship problem. And so it's best, I think, to build software that has the necessary financial services components embedded in it, but the software is focused on solving the relationship problem. So when Evan was talking about the awkwardness of asking someone to split payments, or that sort of group project dynamic from school that we all know, where it's like one person takes the lead and everyone else kind of free rides on top of the work that they do, like those are very human problems. Those are relationship problems. Money is just the catalyst that sort of creates the stress and the anxiety around that relationship problem and strains those relationships. It's why people move out of shared apartments, because they just can't handle these like administrative problems. Fintech should solve those, right? And I think the stickiest features, and to Miguel's point, sometimes these aren't standalone companies or products. Sometimes they're features within a product. But these features are the things that make these products, I think, really stand out relative to traditional bank products, where, a bank will let you send money from one account to another. What's the difference between that and, embedded expense sharing? The difference is that 10% layered on top that's more about the experience and the relationships and the workflows, and less about the actual monetary back and forth.
Evan, I'm tempted to ask you whether you've got an app that will help people get their messy flatmate to sort of wash up and tidy up, but that's a bit of a stretch too far. A more serious question. The obvious use case is the one we're sort of talking about, where you've got a bunch of flatmates living together, and they've got a bunch of shared expenses, and it is a lot of work. And Alex, absolutely great point about the emotional challenge of how do you get people to pay and so on. Have you found any unexpected use cases coming through, or when you were researching, when you were talking to your customers and so on, or as you start to see people using it? You mentioned travel being one thing. Are you seeing different use cases to the ones you were anticipating?
Yeah, it's very early days at the moment. We're a week in. We've got thousands of groups being created as we speak. So we're actually really excited to see how these use cases evolve. We think that we've made some bets. We know that there is going to be a really good use case around sort of setting this up and maintaining it as something that you're not necessarily in all the time. It could be a group of friends that you have a dinner with every so often, or you go away for a weekend every so often. So there's like that component, which is like, just making sure that feels really quick and intuitive to do. I think the more difficult one that we're really interested in is the share house environment. It's like, from talking to customers and speaking to people, that's the tricky one, where one person takes a lot of that. It generally takes a lot of that, I guess, burden. And so if we can really solve that one, I think that's a really big opportunity for us. Beyond that, we're also thinking about shared accounts. So in the background, like the sort of the bigger picture there is like, also, rather than splitting expenses and having everyone settle up, there's a bigger opportunity in that sort of share house environment to just have a pool of money that's used for certain things. And I think there's a simplicity in that as well. So needless to say, we'll probably evolve this over time, but we're still sort of early days research.
Yeah, because as some of those younger customers you have get a little bit older, instead of having 5 flatmates, they'll suddenly just have one special flatmate, and then again you get a whole bunch of challenges. When you move into a house with someone for the first time, and you're establishing a relationship and so on, to sort of Alex's point, you don't want that complexity around the money, and I think you also make a great point about how there's often one person in a group who kind of takes responsibility for managing the money. And if you can...
Yeah, it's funny, actually, we worked in the reverse there. So probably our first sort of step, we talk about multiplayer banking a lot, and I think multiplayer has really been a lot of the foundational work that we did early days with Up, to make sure that customers really had a profile on Up, and a lot of our features were, I guess, really social, conversational. So that was sort of really embedded early days. But the first real product or feature that stepped into this was joint accounts. And so we have this feature that's been really popular called 2Up, which is all about that moment. It's like, it's not joint accounts traditionally in Australia and probably in many parts of the world. It's like you kind of go all in on your finances together. Whereas 2Up is really about like, how do we do it in a way where it feels like you can commit as much as you want to? And so we saw great success with that. I think about 1/4 of our customers are 2Up customers. So we sort of saw the opportunity there, and we've continued to build on that. So, letting more people into that sort of, I guess, world.
Fantastic. Well, congratulations to you and all of your colleagues. There's so much mileage in sort of social finance and shared finance, and just helping groups of people manage their money better. I mean, helping individuals manage their money better is really important, but there's so much more to be done in helping groups manage their money better. So congratulations to all of you. Okay, so from Australia to Brazil, we're flying a few thousand miles. Our next story is about Pix Automatico, which has opened Brazil's recurring market to millions of people. So Pix Automatico, which I'm probably horribly mispronouncing, is Brazil's first recurring payment feature integrated into the popular Pix instant payment system. It enables people to set up automatic recurring payments, things like utility bills, subscriptions, gym memberships, with a one-time authorization in their mobile banking app, with no need to approve each payment. With a one-time authorization via a QR code or a banking app, users can allow future fixed or variable payments to be deducted automatically, with control to cancel any time. Analysts expect it could drive $30 billion in e-commerce spending over the next couple of years, potentially overtaking existing systems like boletos and even challenging credit cards in recurring billing. So to tell us more, we have a voice note from Sebastian Fantini, Director of Product at eBanks, who's going to give us a little bit more insight into Pix Automatico.
The launch of Pix Automatico marks a new chapter in Brazil's digital economy. eBanks has made the very first projection about the impact of this new recurring payment feature. We estimate it will unlock over $30 billion in e-commerce transactions within the first 2 years. This means that recurring payments will account for 12% of Pix volume in online commerce by 2027. And this growth will be driven by the inclusion of millions of people who previously couldn't access products and services that until now were limited to cardholders. In Brazil, 60 million people don't have access to a credit card, which is currently the main payment method for recurring transactions in the country. Now they have a way to make these purchases without relying on access to credit. And this is reflected in our projection at eBanks, which means only $2 billion is expected to migrate from credit cards in 1 year. That indicates Pix Automatico is really opening up new consumer segments and creating more opportunities for digital transactions.
Miguel, I want to come to you first because I think you're very familiar with this region and Brazil and so on. I'm thinking this is huge. This is a really big deal for Brazilians and Brazilian businesses because this hugely simplifies things. Am I overestimating the impact of this?
No, it is a big deal. That's for sure. By the way, your pronunciation is quite good. Don't worry about it.
Quite good.
And I'll just say, so we've been investing in Brazil since pre-Pix days. So we've seen the rise and the growth of Pix, which has been amazing. Most Brazilians are using it today, if not daily, weekly. And so what happens now is, for the longest time, and not just in Latin America, but in many emerging markets, what you have been hearing for years is it's a real problem to set up recurrent transactions. The rejection rates are high. There's many false fraud alerts, right? And there's entire companies that have been built around fixing recurring payments in Latin America and Brazil. So we'll see what happens with those companies. But what happens now is you have, number one, a population trained and familiarized on using Pix. And number two, the open secret about Brazil is that it's the country of BNPL, right? They've been doing BNPL since before it was called BNPL. Everywhere you go in Brazil, you want to buy shaving cream for a couple bucks, you are offered to do it on installment payments. And you can do it on 2, 4, 6, I believe 12 installments. But that requires that you have a credit card or some sort of credit relationship with a financial institution, right? So this unlocks that. This removes the need for that credit line. And I think that is the point that we just heard, is that you can offer recurrent payments and BNPL-like experience to everyone, essentially, right? Everyone with a Pix account, which is, almost the entire population. So yeah, it is a big deal. It's gonna continue fueling this intense growth of e-commerce in Brazil, and certainly, like companies have been preparing for this because the central bank in Brazil is so good that, this is not a surprise. I've been hearing about Pix Automatico coming online for like 2 years. And so every retailer, every business is already prepared to kind of start taking the flows. So it's going to take some time, of course, for everyone to get familiarized, but I would bet money that we're going to see a hockey stick growth in the coming years.
Alex, I'd love to bring you on this because I was looking at this and then thinking about the sort of Walmart, Amazon stablecoin story and thinking, well, actually, Is this to some extent what the United States needs? Is, if you had a working open banking system, that would kind of solve Walmart and Amazon's problems, not quite overnight, but that would make a huge difference to them, wouldn't it?
Yeah, it would. The thing that's challenging about the U.S. relative to Brazil goes off of Miguel's point about the Brazil central bank being amazingly good at their job, which they are, is we just don't do things like that in the U.S., for better or for worse, right? I remember I was speaking to someone who works at the Brazil Central Bank, and I was asking them how they've managed to be so successful with Pix, right? Pix overtaking both debit cards and credit cards combined volume in Brazil in a relatively short period of time, being that disruptive. And they said, well, it was really easy. We just built the system, and then we told the banks that we regulate, you have to use it. And that sounds really simple. And then I explained to them how that works in the U.S. and the fact that we've introduced a faster payment system from the Federal Reserve, FedNow, and the Federal Reserve has to go to industry conferences and get a trade show booth at those conferences selling FedNow to the very banks that they regulate because they're legally not allowed to require their banks to use FedNow. When you extend it to open banking, right, we saw the CFPB under the former administration work for years to carefully craft an open banking rule as required under the Dodd-Frank Act and to solicit extensive industry feedback and to incorporate that feedback into a well-reasoned final rule, only for the banking lobby in the U.S. to file a lawsuit against that rule literally hours after it was finalized, challenging it, which it seems at the moment will result in the entire rule getting vacated and tossed out and years of work being flushed down the drain. So it would be amazing if we had the same type of regulatory infrastructure that just made these infrastructure upgrades sort of just by force and just jumped our market forward. That would be enormously beneficial to Walmart, to Amazon, to small businesses, right, that I think benefit enormously from having Pix and having it be something that all banks support and that most Brazilian consumers use. That's just not how the U.S. market works, unfortunately.
Yeah, there's a crucial difference, right? In the U.S., every state has a banking regulator, plus there's a bunch of federal regulators. In Brazil,
and they all fight with each other all the time and can't get anything done.
Whereas in Brazil, it's just the central bank. That's the only regulator.
Evan, how about Australia? Australia has open banking, but my understanding is that it's mostly just around sharing data, and you don't yet have the kind of open banking payments framework that sort of Pix is enabling. Is that correct?
Yeah, sort of. So open banking is definitely been quite at the forefront, I guess, and it's quite easy in Australia when we've got sort of the big four banks and not a lot else outside of that. So it's quite easy to get alignment. Regulations typically been quite good, and open banking is coming into the market. Yes, it is mainly just around data sharing, and I think there's a lot of opportunities in that, in helping our customers sort of see their overall position, and there's many things that we can do in that space. But we've actually got quite a similar solution called Pay2, which was more of an industry-led solution, and we do have that in our app, which sounds very similar to what we're talking about here. I don't know if we have quite as many of the same problems, though. That sort of service probably doesn't have perhaps the kind of adoption that it might in other countries. I think we're very heavily, especially our younger customer base, very heavily use debit cards. And a lot of the, I guess, services that you can access can be accessed really easily through that, and things like BPay. So we've kind of got a lot of the solutions there through those services. So it hasn't sort of had massive growth yet. But I think open banking will eventually be the ticket to making that really powerful.
Last very quick question to you then, Miguel. Is this going to be a sort of template for other countries around the world? The regulators have all run the rest of the world just looking at Brazil and saying, oh yeah, they've done what we should have done.
For some. The problem is that the challenges that the U.S. has around financial regulators.
No, Miguel, no, don't say this.
A dose of reality. those challenges already exist elsewhere, right? And not every central bank has the same independent authority that the Brazilian central bank has. Some are more subject to political whims and winds. So, unfortunately, I don't think we're going to see this generalized approach around the world. For some, yeah. I mean, I don't follow India as closely. I mean, we know that Pix was inspired by UPI, India's UPI. I don't know how UPI has evolved, whether they have their own version of Pix Automatico or UPI Automatico. But I do know that central bankers around the world do pay attention and talk regularly to the Brazilian one. I also know that the Brazilian central bank has open sourced their Pix infrastructure, right? But you can open source something. You can put, Harvard classes online for free, but if no one watches it, it doesn't matter. So, some are paying attention, but it's very hard to execute in reality.
Fantastic. Okay, now for a quick look at one more newsworthy story this week that we don't have time to cover in full, but we think you'll find just as interesting. And this is that the UK high street lender Metro Bank has received a takeover approach. Metro Bank, an established lender, has received a takeover approach from Pollen Street Capital, a private equity firm with ties to Shawbrook Bank. This comes after Metro Bank's financial troubles in late 2023, which nearly caused its collapse. The bank was rescued through a £925 million refinancing deal led by Colombian billionaire Jaime Gilinski-Bacal, who became the controlling shareholder. The potential takeover could see Metro Bank taken private and possibly merged with Shawbrook, combining Metro's strong retail deposit base with Shawbrook's business lending strengths. Metro Bank's share price rose significantly following the news of the approach, reflecting renewed investor confidence. Talks are still at an early stage and no deal is guaranteed. Approval would also depend on support from major shareholders, especially Gilinski. So I think this is a really interesting story. I remember when Metro Bank launched, it was really going against the tide. People often talk about neobanks and challenger banks, and I never like those terms because they miss the essential fact that almost all new banks had born digital. Metro Bank was very different, launching with a branch-based strategy, reckoning that there was an underserved market in the UK of people who really wanted a better branch service. In practice, despite some fantastic people who work there, that strategy has been proven quite hard to execute, resulting in some challenges for Metro Bank. So it was a brave adventure, but I think the combination with Shawbrook Bank could be a very smart move because really Metro Bank just launched 10 or 15 years too late. A great idea, but maybe at the wrong time. And finally, let's take a look at a story that's a little bit more unusual, which is this week Klarna is back in the news for a slightly different reason, which is that Klarna's chief executive officer is now taking your calls over an AI hotline. This was reported in The Verge. The phone hotline is powered by AI that impersonates CEO Sebastian Siemiatkowski. Users in the States and Sweden can call and speak to the AI Sebastian, share feedback about Klarna's products, mission and services, and receive automated responses. The AI gently steers the conversation back to Klarna-related topics if needed. So, panelists, firstly, I don't know how much of a conversation you want to have with Klarna, but would you ever want to talk to an AI hotline? Does that appeal? Evan, would you want direct access to an AI bot that sounded like your CEO or a CEO?
It's all very strange, isn't it? Yeah, I don't know about my CEO. I think I've got pretty easy access to him as it is. So yeah, no thanks there. I must admit, though, I do talk to chatbots a lot these days. So I can certainly see the utility in having a conversation with a AI that uses a voice or a personality of someone famous. So that'd be far more interesting.
What about if you could have, maybe Alex or Miguel, if you could have a sort of hotline to anyone, sort of dead or alive, is there someone that you would want to have a conversation with? Maybe Alex first.
Oh gosh, that's a good one. Probably for me, it would be if we could do AI bot versions of all the heads of the regulatory agencies, just so that, like, hey, if we have a question, we can just get the answer right away. And of course, they would never do this in a million years because of the risk of like their reputation and perception being damaged. But I could see fintech companies lining up to be able to ask a virtual representation of a regulator questions on the drop of a hat.
Nice. Miguel, what about you?
I'll answer your question in a second, but Sebastian, the CEO of Klarna, he has also a bit of a reputation of being a bit of a male model kind of guy. He's been on GQ and all that. So I imagine this hotline, like a different type of hotline.
Hotline.
The hotline is whispering. But to answer your question, I mean, just take it very personally. I would probably want to talk to some of my grandparents and ancestors. That would be cool, Never got enough time with them.
Nice, yeah. What about you, Evan? If you, is there anyone you'd like to talk to from the past or currently talk to a sort of AI version of?
Yeah, I was thinking about this. Look, like I said, I like going for walks with chatbots quite a bit these days and like working through problems. So maybe it'd be good for, going for a walk with someone like Jurgen Klopp, if I really just want to kick up the arse in terms of motivation, that'd be a lot of fun. Like the way he yells on the sidelines, I could certainly use that sort of yelling sometimes just to get going on something. Or I don't know, maybe something like David Attenborough could sort of help me through the existential dread of, AI superintelligence. So that'd be my two.
Very nice. I was having a think about this and I decided that actually, maybe I would be most interested in talking to Franklin Roosevelt and Dwight Eisenhower, because when I look at the state of the world today, I think of the challenges that, those two men, among others, wrestled with in the 1940s and the success that they had in bringing, decades of peace. I'd be interested in their take on the situation we've got ourselves into these days. All right. Well, that wraps up this week's FinTech Insider News. Thank you so much to the three of you for joining me, especially Evan, because it's in the middle of the night. Where can people find out a little bit more about you and your companies? Alex, where can people find out a bit more about you and about FinTech Takes?
Yeah, if you just type in fintechtakes.com, you'll see the newsletter, podcast. I also spend way too much time on Twitter, so you can find me there as well at AlexH_Johnson.
And Evan, where can people find out more about you and about Up?
Yeah, well, if you're in Australia, I'd encourage you to jump on either of the app stores and give Up a go. It's very easy to sign up, and Groups is there now. For me, probably I'm not super into the socials, but if you want to hit me up on LinkedIn, that's probably the easiest place to connect with me directly.
I think people want to pose as an AI bot if they want to reach you.
That's it.
And Miguel, how about you and Gilgamesh?
Yeah, I am very active on LinkedIn, so people can always reach out there. And Gilgamesh, we are just look for Gilgamesh Ventures, gilgameshvc.com, or FinTech Leaders as well.
Fantastic. And as for me, Benjamin Ensor, you can find me on LinkedIn and you can find out what the team at 11FS have been up to at 11fs.com or on socials. So thank you all so much for listening to today's FinTech Insider. If you like what you heard, please do follow us on your favorite podcast platform. And if you really like what you've heard, please share the podcast with a colleague or a friend. If you want to join the conversation, seek us out on social media. Just search for 11FS or FinTech Insider, or you can email us at podcasts@11fs.com. Thank you all again, and goodbye.
David and Goliath is a story we know well at 11FS. As a challenger consultancy, we're often going head-to-head with household names that have far bigger headcounts than us. And once again, that was the case at the 2025 British Bank Awards. And the result? We took home Consultancy of the Year for the 5th time. Another win for David. What makes this victory even more special is that it was voted for by our clients, the people and businesses who see the impact of our work firsthand. Because in our world, scale doesn't equal impact. And that's exactly how we outpace giants like Accenture and Capgemini. So if you're looking to partner with an award-winning team of fintech consultants helping to build the next generation of financial services, get in touch. Visit 11fs.com/ventures to find out more. Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alica Bank who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.